Good afternoon, or good morning for some of you, depending on where we are. Today, we are going to talk about some of the ins and outs of inventory and specifically negative inventory and how QuickBooks treats this. My name is Jena. I'm a consultant here at Fourlane, so let's go ahead and get started with talking about our negative inventory. Just to kind of go through a little bit on the front end in general, what is negative inventory and why does it happen? The idea of negative inventory is that we are invoicing a customer before we have that full quantity available in our system. Some examples of when this typically happens is if we maybe have an issue with our order of operations, meaning sometimes we might enter a customer invoice or sales receipt before we've gone through that inventory receiving process to bring that quantity on hand in. In addition to that, sometimes if we have only a partial quantity available, but we receive the invoice in full, that can cause our inventory quantities to go negative as well. And then another one that we see very common is if we are dealing with any kind of customer prepayments. What I mean by that is if a customer prepays for any part of their order, sometimes an invoice is created to receive in that payment, which causes those items to be invoiced when in actuality we haven't fulfilled the order yet. So again, going back to that idea of maybe an issue with order of operations and pushing an entry into the system before it's ready. One of the last common mistakes we see that can cause inventory items to go negative is if we're adjusting inventory through a journal entry. And what I mean by that is entering an entry that only goes to our inventory asset account and not our items. If I come in here to our QuickBooks file as an example, if we want to make any kind of inventory adjustment, positive or negative, under our inventory tab, we have adjust quantity and value on hand. This allows us to post those corrections directly to an item versus a journal entry flows specifically through the GL accounts on our chart of accounts. So making an entry to our inventory asset value to increase it, if we're getting inventory in, does not actually bring the quantity into our system. So again, just being careful of how we're making entries in the system. We want to make sure that anything inventory related is pointing to the items themselves and not just to the GL account. Some common areas where we can see if there's any negative inventory in the system are going to be our inventory valuation summary report. This should be a regular report we're looking at that gives us our current quantity on hand. As you can see here, if you've got inventory parts versus assemblies, QuickBooks will provide a breakout for you of those different quantities. And if an item is negative, it will show on this report. You can see here I've got an example of an assembly that we've built that pushed into the negative because of an invoice we entered. There is also a report called negative inventory listing. So rather than looking at our entire inventory valuation report, this will limit it to just the items that currently have a negative quantity on hand. So this one is a little bit more palpable and easier to digest rather than looking at the entirety of our items list that have a quantity. But again, both of them should provide the same information for if an item has a negative quantity. Another area we can look at is when we're actually doing that invoice creation. In our quantity field, when we are inputting an invoice, you'll notice there's this little icon here. It almost kind of looks like a computer icon. But if I go ahead and click on this, what this does is it gives me snapshot information regarding my item and the quantity on hand available. In this case, I've got sites turned on in my file, so QuickBooks is giving me a breakout of my quantity on hand per site location. If we didn't have sites, it would just give us a single line item balance for our overall quantity. But this lets us know where I have inventory available and where I should be pulling from based off of the quantity that I need to fulfill. So again, another helpful area when we're actually on the invoice entry itself to help prevent an item from going negative. Another question we usually get when doing any kind of entry like this is, can you use the same item twice? In this case, could we use the same item twice if we've got quantities from different warehouses? The answer to that is yes. If I've got so much available in warehouse 1 and so much available in warehouse 2, I can post this item twice to pull quantities from both locations to fulfill my order. Alternatively, I could also come in here to my inventory tab and I could use this transfer inventory function to go ahead and move inventory between my locations in order to get the full quantity available. But overall, the answer is yes. If we need to have multiple instances listed to pull from different areas, we can do that. One of the last areas you can go to see if there's any kind of negative inventory happening in the system is called troubleshoot inventory. I am in the accountants version of QuickBooks, so I've actually got a separate accountants tab listed here. If we're not in the accountants tab, you will see under your company tab that there's typically an area called accounting tools, and this will give you that feature as one of those tools. So under our accountants tool, I've got our client data review and then troubleshoot inventory. So this gives us a variety of information surrounding our inventory, but the thing we want to focus on is negative quantities. So what I did in this instance is I unchecked these other fields that I'm not looking for information on, specified a date range. Don't worry with the date range. This is a sample file, so that's why the dates look a little wonky. But typically you'd be choosing a date range in the current. And then down below here, you can ask QuickBooks to tell you if there's any negative inventory as of that date, or if an item went negative at any point in time. So that's a helpful differentiator to say, is an item negative just as of this date range, end date, or did this item ever go negative at any point in time within this range? So again, giving us some helpful information regarding our overall inventory, but those are going to be the handful of ways you can look at if there are any instances of negative inventory in the QuickBooks file. Okay, so next, one of the big areas we can utilize to help with our negative inventory is going to be in the preferences. So I'm going to go ahead and come back to our QuickBooks file. Now, one thing to note is that when we're talking about anything preference related, the admin user is the only user who can make these adjustments. So that is something to keep in mind. If we want to make these updates to our system, it does have to flow through the admin user. If I go ahead and come in here to our Edit tab and then down to Preferences, we've got a variety of different sections we can look at, but our focus is items and inventory. And then we also have My Preferences versus Company Preferences. My preferences are going to be user specific. In this case, we're talking about global company preferences that impact everyone in the file. Down here in the middle of this inventory section, you'll notice there is an option regarding selling inventory. It says warn if not enough inventory to sell. Again, in this case, because we've got sites enabled, there is an additional note regarding inventory sites. If we didn't have that enabled, we wouldn't see that here. but we have the capability to have QuickBooks warn us if the quantity we want to sell exceeds our quantity on hand, if the quantity we want to sell exceeds our quantity available, or we can say don't allow negative quantities altogether. One thing I get asked by clients quite a bit is, do we have the capability to choose multiple here? And unfortunately, we don't. You can only choose one preference. This preference can always be adjusted, so you can change it, but there's not a way for us to select multiple at one time. One of the other things I'd like to note here is understanding and differentiating between what quantity on hand versus quantity available means. You can see a little bit above here, there is a preference that says when calculating quantity available for my inventory, deduct the following. We can choose to deduct a quantity on a pending build. If we are in the manufacturing space at all and we are doing any kind of assembly work to put together our products, a build assembly in QuickBooks is going to handle that function. Sometimes what happens is some of the items are available, but not all of them. So we have to wait to put that build in. And in that case, for the items we do have available, we can choose to have those quantities reserved for whenever we get in the remaining items. Also, if we've got any sales orders in the system, these are going to act as a precursor to a customer invoice to say, I've got an order with a customer, but I'm not ready to fulfill it yet. So again, the idea here is that we're protecting those quantities until we're ready for fulfillment. Those two things help differentiate between what our quantity on hand is versus our quantity available. As an example, if I've got an item with a quantity on hand of 10 and I have 5 on a sales order, my quantity on hand still stays 10, but my quantity available is 5 because I've got 5 reserved for that sales order. So this is really important to note when you're considering how you want QuickBooks to handle potentially not allowing negative inventory in the system. Otherwise, whenever you are at that invoicing stage, if we are either potentially going negative or conflicting with the current quantity available, QuickBooks will give us a warning when we're looking at our invoice entry. One of the other things to consider that we always want to be mindful of when talking about negative inventory is what is the issue and why is it so important that we try to prevent it from happening. One of the issues is that inventory, unfortunately, is known to cause corruption in our QuickBooks files. So we like to ensure that we're doing everything we can from an operations standpoint to prevent that from impacting our system. So it's really important to either try operationally to not allow negatives or to have QuickBooks help you with that preference. Some other things to consider when talking about inventory quantity on hand is the difference between a global inventory value and an on-hand value at possibly a site, serial, or lot number level. Again, in QuickBooks, we've got those advanced inventory features to help us get some more detailed information on our inventory tracking, and QuickBooks does differentiate between the two. So again, we could have a -5 at warehouse 1, a +10 at warehouse 2. Overall, QuickBooks looks at that item as having a global positive value, but we do have a negative instance at the site level. So just some additional parameters to think of if we're using those advanced inventory features. So what are some ways that we can help ensure we're maintaining proper inventory and preventing instances of negative inventory from happening? One thing we run into very often is can we receive in inventory after the invoice is already entered, but backdate it? Unfortunately, what happens in that case is QuickBooks assigns a stamp when you enter a transaction. So for example, if I create an invoice today, I receive in our inventory on Friday, but I backdate it to Monday, even though the date of that receiving entry is before my invoice, the QuickBooks timestamp of when it was entered is different. So there's a little bit of internal confliction happening with how QuickBooks identifies when something was entered. So that is something to be mindful of. Our preference is that we should always be going through and receiving in inventory before any kind of invoice creation. We know, unfortunately, sometimes volume-wise, that is not feasible to do on a regular basis. And if that is the case, what our next recommendation for our clients is to do a process called never negative. What happens in that case is we go through and do a full inventory cleanup for all historical instances of negative inventory. So I'm going to take a pause there and just let us think about that. What does all historical instances of negative inventory mean? When I'm talking about the historical instances of negative inventory, I'm not just referencing those potential quantities that are negative on our reports. So again, we can look at our negative inventory listing and see what is currently negative. With that never negative process, we want to resolve the negative instances for all time. If you look at the history of an inventory part or assembly, you can see when the item went negative on that inventory valuation detail report. And that is the report we are using to quantify how many items went negative and what their negative quantities were, so that we can make an adjusting entry in the system via that inventory adjustment to bring back in quantities. Now, one of the things that happens in this instance is once we've made that adjusting entry, it does have a forward impact on our GL accounts relating to inventory, as well as our current inventory quantities on hand. So there's a few different steps to this process to establish that inventory adjustment to get rid of the negatives, make sure that our current quantity on hand isn't impacted and our starting quantities in the file remain the same. And then that third piece is doing what we would call a true up to make sure that our financial accounts also are not changed. This is the recommended way to go through and resolve those instances of negative inventory in the system. Once we've made that adjusting entry, the way that we're able to double check if something has been corrected is again through that troubleshoot inventory preference. So when we come in here and we look at that instance, the way we saw earlier how it showed no items that were negative during that particular time frame, our entry will ensure that we've been able to correct all instances of negative inventory. Sometimes you may need to go through that process multiple times. What we usually recommend with our clients, if they do have to go negative based off of their volume or operations internally, is doing that cleanup on at least a monthly basis, if not more regularly, but at least incorporating it into the month-end close process so that we're not allowing those instances of negative inventory to stay in the QuickBooks file. Again, there's no technical rhyme or reason for if and when negative inventory in the system will cause corruption, but over time, that is one of the main problem areas we see with issues overall in the QuickBooks file. The other thing to consider when talking about what potential problems inventory and specifically negative inventory can have in our QuickBooks file is that QuickBooks can't take the cost of a negative item. So for example, QuickBooks can do average costing or FIFO to track our inventory and determine what the cost of that inventory is when it's leaving the system. If we have an item that goes negative, QuickBooks unfortunately doesn't know how to identify what the cost for that negative item is. So it will make its own adjusting entry to try to keep that inventory correct and accurate. And then as soon as we make an entry to actually bring the quantity back to 0 or positive, QuickBooks then has to back out its entry that it made in order to keep the inventory correct. So it's constantly going through all of these internal entries in the background to try to maintain inventory. And what that ultimately does over time is it causes bad item history and can lead to false information on our items when we're looking at a report. It can skew what the inventory cost is, as well as cause other reporting issues. So that is a huge area of concern when we're talking about making sure we're not allowing inventory to go negative in the system. So again, just want to recap here. When we're talking about negative inventory, we come back here to the start. So what are some of the reasons inventory goes negative? Most common, that's going to be if we're entering a customer invoice before we've gone through that receiving process. If we've only got a partial quantity but still receive in full for our invoice. If we're handling any kind of customer prepayments and invoice before that quantity is available, or if we're making inventory adjustments through a journal entry, which are just impacting our inventory asset value and not our overall quantities. Preferences are going to be your best friend when it comes to inventory and specifically negative inventory tracking. Our recommendation is always going to be to set that preference to not allow negative quantities, but at least making sure we understand the difference between those preferences and what the quantity on hand versus quantity available means is going to be super important in helping us keep track of instances of negative inventory in the system. And then again, last thing here, how to handle negative inventory. Making sure that we're going through and receiving in the inventory. We don't necessarily have to enter our vendor bill and impact our accounts payable aging, but we need to make sure an item receipt is input to bring in those quantities on hand. If we do have to go negative, we want to look at utilizing that never negative process, potentially incorporating it into our month-end close, to make sure that we're cleaning up those negative instances regularly, and then just keeping an eye on functionality and performance of the file. If that negative inventory is left in the system, over time, there is a high likelihood that we will see more performance and stability issues than normal if that negative inventory is left unattended. Hopefully you guys are going to go back and look at your files if we're tracking inventory to see what our inventory history looks like, and maybe possibly perform some cleanup or make some setup adjustments to help ensure we don't have instances of negative going forward. With that, I hope everyone has a great day. Thank you very much for attending.